All right. Hello, everyone. We're back again today on the Talk to the Expert web series. This is a series of conversations with experts in different various industries, from interior design, business coaches, video production, brand and strategy, and all the fun stuff to help us during this time that we're mostly at home, and just help us with a lot of information that are very helpful to us as business professionals, entrepreneurs, moms, dads, and just everyday general human beings. Today, I have with me Erica Cusumano. Erica is a mortgage broker, and I know that already we have like over 10 questions that she's going to be answering, because everybody needs to know what's going to happen in the next couple of months with mortgage, with money, and all that fun stuff. So I'm very excited to have Erica, because she is absolutely knowledgeable in this area, and I trust her expertise. I will let her introduce herself, and then we will take it up from there. Erica, hi. Introduce
Hi.
yourself. Tell us why you are the hot pepper here, and why we should be sitting down and listening to you so attentively.
Yeah, for sure, for sure. Thank you, Caroline. I appreciate the opportunity to have this talk with everybody. So a little background about me. I've been a mortgage broker now for almost 13 years. I've always worked under Dominion Lending Centers, which is Canada's national mortgage company. And under them, we are licensed professionals, and we have the ability to use most of Canada's largest banks, credit unions, and trust companies. Some of the larger three banks that we don't use, which is BMO, RBC, and CIBC, is only because there is no brokerage channel. That doesn't mean we don't use certain monolines that they do have and create. So we do have monolines, which are smaller banks dedicated for actual mortgages, held by bigger banks and institutions and investors. So those are all given to us to see what the rates are and what the products are. We have different niches with each monoline and bank. We do work with Scotia, we do work with TD and National Bank. So those are the larger ones. Again, we have pretty much, well, we have every product under the sun. So whether you're a first-time home buyer or you're a seasoned investor, that's someone who has bought and sold many times, maybe they have lots of properties for rent. And yeah, we basically are given, I was asked this question actually this morning from neighbors, and they said, do you have to look for the rate all the time, like call up the banks? And I said, no, it's not at all how it works. What we have is a dedicated rate sheet, and on that rate sheet, it has a list, compiled list of all the banks, all the credit unions, and the trust companies that we use, and they continuously update it for us. So we have it like at a touch of a finger. So that's why every single day we have new rates that come out, or we have the indication of rates falling or rising and all that kind of stuff. So it's immediate. I think the other important thing to know about a mortgage broker versus a bank is that, with all that being said, we have all the knowledge and expertise at our fingertips, and we know the vast variety. Where if you're working with just one particular bank, you walk into that bank, or maybe not these days, walking anywhere. But,
Calling.
even if you're calling,
hours.
right? Yeah. Even if you're calling them, you're going to get their products and their expertise. Okay, so it's not to say that they don't know a lot. They know everything about that particular bank, but they're going to also have to sell you, for lack of a better term, on their products and their rates. Right. So they're not able to tell you if ABC Bank over here has something better. So that's right. The difference, okay, of working with an individual bank or a mortgage broker. We do not charge our clients. Good. We are free. The only time that a mortgage broker charges a client is if it is a private loan. Okay, so that's completely different. It's like we could have a whole series on just that, or people can ask me independent or independently if they have questions about that, and I can explain what a private
Okay.
loan is. Secondly, we have what are called B banks. And so if somebody needs this, it might be because they're self-employed and it's just a different kind of income that they're getting,
Got it.
and it doesn't fit into the A side of banking. And or they have credit that has been bruised and isn't quite up to par, and they want to get into the market now, maybe in a 1-year term, and in that term they're going to have a higher rate, and they're going to have a lender fee.
Got it.
So they pay, the borrower pays a lender fee for however amount of loan they get. So let's just say, for instance, their loan was $400,000, they might have a fee of 1%, so it's a $4,000 fee. That lender then pays us through that fee, but again, it's not the broker charging, it's the lender charging. So that's the only time that somebody's going to pay for something.
And Erica, did you mention how long you've been doing this?
Yes, yeah, almost 13 years.
Amazing.
This July.
This July, awesome.
This July. So I've been through the 2009 recession. Yeah,
That's right.
And now we're basically headed in another one with our health crisis that we're in. And that's basically what we're going to be talking more about today, and how it's geared around that, and what's happened just in the slight 2 weeks that we've gone through this new change. So
yeah, awesome. Thanks, Erica, for coming. I am just going to say very quickly, if you're joining us live, please mute your audio and video once you come into the chat room with your audio and video, so that we can make sure that Erica isn't being interrupted while she's speaking. And I'm sure you have lots and lots of questions. Please put them in the chat box. I will check that occasionally to make sure that I can fill Erica those questions. So without just wasting time, Erica, I'm just going to dive right into the questions that we already had put out there before this session started today. Let's first of all look at the overview of the last 3 weeks, when all this kind of went up and things just went up in the air. How much can you say has changed, and what are the things that are the most important when it comes to what people should be looking at that has happened in the last 3 weeks, and how it affects, them?
Okay, so it's a very wide question, but so a lot has happened obviously in 3 weeks. Starting with, I guess, the government creating all the assistance that people were going to need, and basically seeing how important this whole COVID-19 actually became, and just from affecting the jobs. So having to close down storefronts and people losing their jobs, being put on EI and all that. So there's a lot of different sectors, and then the whole people having to stay home, right? So so many people were able to move into their homes and work from home, so they're still getting an income. So there's that sector, and then there's the ones that got laid off, and they're at home as well, but they don't have an income. So then, therefore there's the EI, and there's now all these other benefit packages. Just yesterday, I think the one for, what's it called, CE, the Canadian Emergency
Response benefit.
Yes, the response benefit, that one coming out as well. So it's going to help a lot more people. But again, when something like this happens at such a grand magnitude and so quickly, everybody wants an answer today.
Right.
But it takes some patience and understanding that this is happening to all of us at the same time. And the banks, the government, and everyone, they're trying to adapt just as quickly as we're losing, right? So for those individuals who in the beginning were getting laid off first, obviously their fear for, if they're a homeowner, their fear was their mortgage. That's the very first thing you think of. So the question started, oh my gosh, am I going to lose my house? Are we going to lose the mortgage? What's going to happen? Are they going to stop payments for now? And we couldn't answer those questions that first couple of days. And then pretty darn quick, the CMHC came out, the CEO of CMHC, which is Canada's Housing Mortgage Corporation. They came out and addressed that they were going to allow for up to 6 months of deferred mortgages.
Okay.
And they were not going to allow Canadians to just fall, right?
Got
Like
it.
that was the statement. So immediately people started having questions of, well, if my mortgage isn't insured, am I not going to be protected? So, and which was a very valid question. So that would mean everyone who bought a home and had only put less than 20% down, they were insured. And so automatically you think, okay, I bought with CMHC insurance premium, so I'm going to be covered. But those who bought with 20%
Over 20%.
down or more down, they were in fear of, oh no, so we're not going to get helped. So that wasn't, I don't think that's how CMHC's CEO wanted it to like come out, but it did. So it transferred into fear into other homeowners. And so I was on the phone for like literally 9 hours a day, just answering calls of panic. Wow. And trying to say, you know, we don't have all the answers yet, but I can guarantee you, like I just knew it in my gut too, that that's not what the banks are going to do. They're not going to make everybody else fail, right? So just hold tight. Let's be patient and let's see what else comes out, because I just knew that there was going to be more and more developing. We just need to give it time. So we did have that, and CMHC and the banks all came out and said, yeah, we're going to do the same thing. We're going to give up to 6 months deferred payments. Okay. So then it became this like mass, or the masses hearing something that wasn't quite being said, or maybe it's just that it wasn't. Again, no one knows what deferred payment means. Maybe we've never really had to do it.
So what is deferred payment? Maybe we should just answer that.
Let's answer that. Okay. So when you get a mortgage, most banks always have a skip payment option within 12 months. So you're able to just skip a payment if you have to. You're going to end up paying it after anyways, but it's just broad, you know, if you want to go on an extra vacation or something, you're like, I'm going to skip my mortgage payment and go away and I'll pay that later. Yeah. That's typically in a mortgage contract. Not many people use it, but they can. Right. So when they heard deferred payments, honestly, the masses thought, yes, free mortgage. We're going to have a free mortgage for the next 6 months. Then the masses also heard, oh, okay, well, they're going to lay a lot of people off and you're going to get to go on EI. And they thought, great, vacation time. But then reality hit pretty darn quick when, you know, they started calling their banks and the banks were so busy that nobody was getting through. Yeah. And again, the panic sets in. And so when that was happening and people weren't getting answers right away, and then they started hearing things on the news, of course, that deferred payment actually means you're going to be paying more in interest later. That rhetoric started with, what? Like the banks actually aren't helping Canadians and they're just going to profit off this. Well, okay, so in a nutshell, deferred payment is not a free ride, and it is literally created for those who really, really need it. So if you don't need it and you do have the means to pay your mortgage, continue to pay your mortgage. But if you do need it, that's who it's there for. And it is a good program and a good setup so that you can have the time that you are laid off. And then hopefully when you get back into your job, you're able to pay your payments again. So the deferred payment itself will stop your principal and interest payment for up to 6 months. Okay. And I'll break it down after what banks are doing. But that payment, the interest, will be added onto the principal later. Got it. And so, yes, in that sense, the banks will be accruing interest on that. But again, it's for those who really need it. And on top of that, when you get your job back, if you have the means to make extra payments later, do that. Right. So those are the tips we're giving is create top-ups, lump sum payments, and double ups. So that will pay down that interest faster and you almost won't have that accrual happening. Makes sense. So some people will be able to do it, maybe some people won't. But trust me when I say, when you get that phone call back or that email back
Mm-hmm.
that you've been waiting for like for a week or two, because that's how busy they've been with all
Yeah.
these calls, people are so relieved that they will have that time to pay their mortgage off later.
Or at least that the option exists. Like,
Yeah.
the option exists, and then you can kind of reassess or assess your situation and see, do I really need it? Do I really need to take advantage of it? And then you can make that decision at that point, right?
Yeah. Yeah. So, and most banks are doing where it's very light upfront questions. So
Okay.
the banks will basically know what position you're in just from the profession you're in.
Okay.
So they'll know right away if you've been laid off, or it's or if you're an RMT, they'll know, no questions asked.
Yeah.
We're going to give you the 3 to 6 months because you had to shut your doors.
That's
You
right.
can't make any income.
Yeah.
So they're being very lenient with it. Some banks are just right off the top giving 6 months. And most of them are doing 3 months.
Okay.
And then they ask you to call back and reassess in 2 months. And they'll give you the other 3 if you need it.
Okay. So let's talk about banks and how they're helping people, homeowners, during this pandemic. What are the other options? Like, are there other options apart from the mortgage deferment that banks are providing at this time?
Oh, okay. So yeah. Other than the mortgages, yeah. So I did read up on, for instance, like the bigger banks, they have other products like lines of credit, credit cards. And so there's been talk, it hasn't been set in place yet with most, but I'll talk about RBC because I know RBC has started it. So RBC is waiving credit card fees right now, interest, for the same thing up to 6 months, and then they can reassess. And line of credit payments as well, so the interest on that. But I do know, even with them, and it will be across the board for other banks, if they allow this for their borrowers, is it will all be case by case. So again, you give them your story, they understand your hardship, and then they will be able to almost customize for you what you need. And so that's the important thing that people need to know, is not panic and just call them and ask them, what can you do for me? And even if it's like, well, right now I'm okay, but I have a fear that in a couple of weeks I might be laid off, and then I have this insurance and this payment and this credit card, and and they'll be able to help you customize what's the best plan. Because their goal, the government and the bank included, their goal is for no one to lose their homes. They do not want to see foreclosures. So they're going to help you as much as possible through this pandemic. If this is where, I'll just say a little bit on this, but this is where it's very different from our 2009 recession. Yeah, and our current recession. It's that in 2009, it was an actual market crash.
Got it.
Right? So the stock markets crashed, the businesses crashed, like it was like a huge actual market crash. And this one is, like, our economists are trying to explain to us very well the fact that it's a health crisis. And so because of the health crisis and the government telling us, in order to stop this health crisis, we as a people need to stay home and do our part. Okay, that's the simplest way to put it. Well, in order to do that, we can't go to work.
That's right.
If you don't go to work, you lose your income. And if you lose your income, you stop your mortgage payments and your credit cards. And it's the whole ripple effect. But it's not that we didn't want to go to work. It's that we had to do this.
Right.
So it's the health crisis. And once this health crisis is under control, the market and the stock market, the bonds, and everything that's included when it comes to finances should rebound. And that's their actual words. It should rebound because it was it never started as a market crash.
Got it.
Everybody will get their jobs back, and everybody will be back into the loop of making money and spending money and creating that market again. But it will take time.
Yeah, for sure. And well, since you mentioned it, we'll just dive into it, because it was one of the things that one of the questions that we already had asked already is, what are the differences? What differences are you seeing between the 2009 recession, 2008, 2009 recession, and what's happening now? And what should we kind of be looking at, in terms of, I don't know if we can call it prognosis, or, how are things looking when you compare both? Since you've experienced both, you've seen how the market, everything was or is right now as well, even though we're still kind of going through and seeing what this would turn out to be. But just kind of from experience, how do you compare both?
I think that, okay, so just in the short little bit of time, what I'm seeing, and I think we're going to, it's still going to get a little worse before it gets better, kind of thing. Right. So I believe that from what I experienced in 2009 was that business was still going. People were still buying places. And what I feel is different right now is the fear factor we all have is way heightened. Okay. Way heightened. And I mean, when you come out with statistics saying that this hasn't happened since World War II, right? That right there will put everybody on their backs and stop, right? So I feel that halt at the moment. Okay. I kind of see in real estate, I see lots of people putting their houses on the market right now, even in my own area. A lot of houses going up for sale, and I sense it to be fear. I sense it to be like, oh my God, we need to get out now while the market's still up. Got it. But I don't see a lot of traction. So there isn't a lot of people going out and buying, right? Because obviously now we know that they have to do online virtual tours. Right. You can go into the homes and look at the homes. So who's going to be buying right now, I would say, are the people that were already prepared. They have their money, their down payment, and their job is still secure. Right. So those are the number ones. And the number two is somebody who literally has the cash to buy. That's right. Yeah. So we might see that kind of market influx again, where it's like the investor buying. But I don't know, because we can't, again, we're hearing that word, unprecedented times, right? It's like a hashtag now. But it really is. And so it's hard to determine where this market's going to go and how it will move, how it will be affected. What I noticed too is back in 2009 to do a refinance was pretty darn simple, and quick. I cannot give you a real reason as to why, but the refinances that we have right now are, again, I think it's that whole thing of fear, but people, there was an influx, like crazy amount of refis coming in because everybody thought, okay, for homeowners, I have my house, there's equity in the house, let's pull it out now as fast as possible. So that if things get even worse, we have a line of credit set up, right? Like a relief fund or something. And so the first week that was happening, I'm certain that people were getting their refis, no problem. But this second week, it has been like banks are quickly to say no, basically. They're like, no, that industry isn't going to survive right now. Those people are going to lose their jobs soon. So it's like cutting everything off. So it's becoming really hard to refinance. You have to really prove that your income is solid and still going strong. And typically a refinance is going to take 3 to 4 weeks to close. But even, for example, I have a few in the pipeline, and the bank isn't even going to look at it for 2 weeks. Oh, wow. Right? So in 2 weeks, what could happen? Yeah. A person could lose their job. Lots could happen. Lots could happen. We don't really know. So, so to tell somebody a certainty of, oh yeah, like, your file is AAA file, we can get this going, no problem, you'll get your money. You can't give that kind of advice anymore right now. Right. You just have to say, okay, we'll get it in. And then in 2 weeks when they pick it up, if things are still the same, great. But the banks have what's the word for it? They have the authority to, we're going to do the regular process, which is check your income, call the job letter, make sure you have the job, all your taxes are paid, all that kind of stuff. And then when it comes closer to closing, so let's say it's going to take another 2 weeks from that period of time, they have the authority to call that job letter again. And if something has changed, you have gone on EI, and they won't pull the mortgage, but they will say, okay, you know, it's risky for you as the borrower, it's risky for us as the lender, so we're going to just give you a month. We'll close it out in a month and we'll check again. Did you get your job back? Great. If you didn't, we'll push it out even further. So the ability to take out money from your home right now isn't as good as it was a month ago.
Before. And that kind of brings me to the other question about refinancing and for people on EI. I was going to touch on that, and I think you've answered it a little bit as well. Like, can people still get new mortgages, and what does refinancing really look like for people on EI and all that stuff?
Question. Yeah. And the simple answer is no.
Okay.
If you are on EI, you cannot get a mortgage.
Got it.
You can keep your mortgage you have, but you can't go out and buy a new house right now.
Okay.
And you cannot refinance right now.
Okay.
Yeah.
That's as simple as it gets.
That's as simple as it gets. And I don't want to complicate it more, but that's the answer.
But what about self-employed people? What does it look like for self-employed people right now?
Yeah, that one is tricky. It's very tricky because we've got self-employed people who are contracted, and then we have the ones that are commissioned, and then we have the ones that pay themselves, right? So it all depends. Things will be looked at a lot more harsher today than a month ago, 2 weeks ago.
Yeah.
So I'll start off by saying, if you are somebody who's self-employed and you pay yourself a dividend from your company, and your company is one that is still thriving and it doesn't have any indication of closing down or having to close its doors for now, or you work from home, like I'm using the example of an IT person for now.
Got it. Yeah.
Because a lot of IT has actually boomed at this time.
That's right.
Help all those other banks. So, so we will look at, again, the typical stuff, their corporate financials, their personal financials, and then knowing that their company is safe and doing a little bit of research on that, then we will give them whether they want to purchase a home or they want to do a refinance, or they can do a renewal. So if they're coming up for an expiry on a current mortgage, they can do a renewal, and they're okay. Somebody who is contracted, that one is tricky too. So, so contracts, again, you have to really prove that you're not getting laid off or the company's still running.
Yeah.
You're working for. And I believe, see, this is where it will be very, there's no cookie cutter to it. It will be case to case. And then also commissioned. I'm commissioned. So for me, it would be, I'd have to show that I have things in the pipe.
Got it.
And that my industry isn't going to be in trouble by this, which, to be honest, I would say that I would be like in that medium risk, because we don't know if people are going to continue to refinance, how many, and how much of the pie am I going to get, right? So those are huge factors that are going to come into place. And that's the thing, like, banks are coming out with new and improved approval processes.
Got it.
Yeah. So we have to work with them and figure out what those processes are. And it's like a new learning curve for us as well.
That's right.
But with the experience we have, we can figure it out. We can figure out pretty quickly as well who can get a mortgage right now and who can't. Okay,
let's just digress a little bit and talk about prime rates and rates generally. And so what is Bank of Canada doing, or what have they done, and how does that with regards to rates, and how does that translate to borrowers?
Yeah, so the Bank of Canada has they've had to basically lower the rates so that we wouldn't hit a recession as quickly as we could have. So that's their whole goal. That's their intention, is to stimulate the economy as much as they can while we're headed into this recession. So the benchmark, so the spending rate that they have has come down all the way to a quarter. and so that means a 1.5% has fallen in the last 3 weeks. And that's huge.
Yeah.
Again, unprecedented for the short period of time.
Mm-hmm.
So they did say that they don't want to go any further than that. They don't want to go into a negative. So they're saying that this 0.25% will last into 2021.
Oh, okay.
Now, how that translates for variable rate mortgages
Mm-hmm.
and the prime rate.
Okay.
So our bench, or our excuse me, our we had kids at home. Sorry.
We have co-workers at home.
Yeah, we have our little co-workers.
And that's understandable because most people do right now. I do. So
oh my goodness.
Yeah.
So okay, so the prime rate has fallen all the way down to 2.45%.
Mm-hmm.
We don't see it falling any further. If it did go to zero on the Bank of Canada's side, then we would be looking at 2.20, so 2.20%. This is right now benefiting anyone who has a mortgage that is a variable mortgage or has a HELOC or a step. People understand what those are if they have it, or just a simple line of credit. So anything running on prime minus a discount, they'll have these, and it's benefiting them. So some people are paying right now 1.5%.
Awesome.
On your mortgage. So it's great for them.
Yeah.
It's fantastic. But if you're coming into a new mortgage, and there always used to be that talk about, should I go variable or fixed?
Yeah.
And a lot of people really liked variable because, in the end, it was always told that you would be paying a little less in interest.
Mm-hmm.
But right now, because of what's happened, the bank has to stabilize their profit margins, let's say, and they are no longer giving the discounts. So you don't see the prime minus 80 or the prime minus 1%. It's now prime plus 2, prime plus 4. So let's say if you get prime plus a half. So at prime being 245, half, all of a sudden your rate is 295.
Got it.
But if I can give you a rate that's fixed and you're secure on it for 279, why would you go to prime?
Yeah.
Right? So that's the whole mindset right now on variable or fixed.
Yeah, because the rates are pretty much low at this point, right?
Yeah.
And there might not be any huge discounts following this.
Right.
Is that what you're saying? Mm-hmm.
Yeah, on the variable. Now, it's very confusing and it makes complete sense that it's confusing, because you hear, oh my gosh, the rates have just fallen so far that we're almost at 0%. Then why are people paying, 2.7 on a mortgage? It's hard to understand that. But the variable rate and the fixed rate do not go hand in hand, and the fixed rate is based on the bonds. So the bonds themselves, I just heard yesterday as well, they want to, the banks want to put a bunch of money into that too. So the bonds used to be, or are created by businesses, the business loans. So when the businesses are doing well and the loans are out and the people are paid because they have employers and the people go out and spend, the bonds can also stay low and the fixed rates stay low. So that's why we saw that little spike in fixed rates, because the bonds had to go up because the businesses got taken away.
Yeah.
Right? Yeah. So that's how all that works. But now I heard yesterday, and we'll get more information even tonight. I'm on a call at 5:00 with the Sherry Cooper. She's our economist.
Okay.
And so she'll be talking more about that and how it's going to affect the fixed rates. But we do, our little crystal ball, we do see that the fixed rates will probably come down again.
Okay.
Yeah.
And you touched on this again, because there was a question that came in about what would be better then, is it fixed rate or variable rate going forward?
So right now it'd be fixed.
Yeah, I guess pretty much that kind of answers that.
Yeah.
Okay. Pretty easy answer to that.
We would have the conversation with each individual, again, customizable, and explain to them why and whatever they're comfortable with. They might be happy with having prime plus 2. I don't know why, but they might. They might think it rides out for a little while longer and prime plus 2 is 265, right? And you can't get a fixed 265.
Yeah.
So if that makes them happy, then great. But if in a year and a half, prime all of a sudden jumps,
yeah,
and now you're paying 3.65, you might wish that you took the two.
That's right. Yeah.
So it's that whole mindset of, are you a risk taker? Can you sleep at night? There are those questions that we ask if you take a variable.
Yeah. Okay, there was another question, and I think we've touched on this a little bit, but if you can say more to it, that would be awesome. What is the process of buying a home now, and what's the process to refinance?
Yeah, so buying a home now, I think we did touch like a lot of it with as far as the income and stuff.
Yeah.
If you have a job and it's still secure and all that, then your likelihood is pretty good. The only change is that when we do the first job call, and usually that would be it. Now they have the authority to do the job call again. So if you bought a home today, you removed all your subjects and everything's great and your income is approved and the whole thing is approved and it's gone to the lawyers, but your closing date, okay, the date of the transaction between the two parties isn't till, let's just say, even May 15th. It's not far away, but a month and a half.
Yeah.
The bank has the authority to pull your job letter and call and ask if you have your job. If you do, great, it will close. If you don't, we don't have the answers in stone yet,
Right.
but we have heard that if you've gone on EI, then all of a sudden it's a high risk.
Right.
And they will work with every party involved to move those dates.
Okay.
So again, they won't ever pull a mortgage. They won't pull your approval, but they'll work with everyone involved to move the dates. That's a tricky thing because
that's right.
It's a trifecta. It's not just those two people. It's, where is that seller going to go at?
Yeah.
They have another contract and they have that one. So I'm not 100% sure how they're going to deal with that yet. But what we do know, just in the last, 6 days, to be honest, March 25th was where we were told if you have any purchases in the pipe that closed, were fully approved before March 25th, then those ones are, for lack of better words, like grandfathered. It's you're secure that we will not pull another job letter call before closing. So for my own experience, I have I've got a few that are going to close April, May, and June. So those were fears. They were like, oh my gosh, what if they lose their jobs? But I was able to tell them, because all of theirs were done before that March 25th date, that they don't have to worry. They will get that. But anything coming through the pipes right now, those conversations have to be had and they have to be understood. And again, we're still getting lots of information, and we're literally waiting for more information on that from the banks to be more concrete, because we need to know what to tell the clients on that. And then the refinances that you just asked, we pretty much did talk about that. Where if you have your job and it's secure, blah, 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 and if you don't, those are the ones that can be pushed more and more, because it's just yourself.
That's right.
Not involving other people. So
that's right.
It's just looking at the borrowers and the bank's risk.
Okay. So there's this question. It says, should we switch our mortgage from one bank to another in 2020, and does it cost me money?
So switching a bank would be on renewal. You can also do it on refinances. But speaking of renewals, so if you have a mortgage and your term is coming up this year, you've been in the mortgage now for 5 years, let's say. Those are the typical terms. You could have been in it for a year or 3, but the typical term is 5. And you're coming up for renewal this year, then yes, we'll do the renewals. Again, we do have to prove your income. So two things, and very simply. If you're on EI and you're coming up for renewal, just sign that letter that comes in from your bank. Okay. You don't need to mention nothing. Unless, they'll know if you're deferring payments and stuff, but they'll let you renew. Just simply renew, whatever rate it is. You can discuss with me too, if I know a better rate than they're giving you on that piece of paper. But I'm pretty confident right now that banks are trying to keep their clients. So they're
Right.
coming out with a pretty good rate on their rate sheets as well
Okay.
for those renewals. So
Mm-hmm.
just simply renew. If you are coming with us and we're taking you somewhere else because we found a better rate, or you're just, some people sometimes get sick of their bank, whatever their purposes are,
Yeah.
those situations happen. So you do have to prove that you are employed.
Okay.
Yeah.
Okay. Sounds good.
Oh, does it cost money, you said? So
Oh,
renewals,
does it cost me money?
yeah, they don't. They
Okay.
don't. We have in-house like lawyers for those ones, for the transactions, and it's just built into the bank, and they do not charge you from going from one bank to another,
Oh,
as
I
long
see.
as names don't change
Right.
and loan amount doesn't change, and it's at the very end of your term. Then
Okay.
it's just a straight switch. We call
Okay.
it a switch or transfer. Those words are used, but no charges.
Okay. I know that, I mean, from lots of things that you've said, and obviously with what we know with mortgages, most things are really not so general blanket, covers everyone. Things are pretty much on a case by case basis because
Yeah.
everyone's situation is kind of different. And I just want to reiterate here that Erica is able to help anyone because her services are free. And all you need to do is give her a call. And at the end of this, I'm going to be sharing Erica's information. Feel free to reach out to her, give her a call, send her an email, and see how she can help. And Erica, I'd just like you to touch on what you're able to help with. I mean, most people are probably asking about mortgage deferments. What are you able to help them with in this period?
Yeah, so right now, most of the questions, of course, are about those deferred payments.
Yeah.
The calm has kind of come after that storm. The first week, I would say, was the harshest week of just trying to calm people and letting them know your bank is going to answer. You just got to give them time, and putting it out there on social media, just saying, look, if you don't need a deferral right now, put the phone down. Literally put the phone down, because it was across Canada. If you think of how many people own a house, every single person picked up their phone. Like,
that's right.
so it was insane. The people started getting their answers towards this week, really, last week, at the end of last week. And what we learned is that the banks would know when your next payment was coming, and those are the people they were getting to first.
Right.
So they were actually getting to people a day before their next payment, and they were like, yes, you're deferred. You're deferred.
Got it.
And it was just like this big sigh of relief.
Yeah.
And I could literally feel it, like through just, I don't know, just the energy of people. And it's pretty cool and good to see that happening too, though, to see the banks were just on it. Honestly, they were on it. As much as people hate banks and that kind of thing, none of us would own a home if we didn't have a bank. Let's get
That's right.
So, like, they really did come through.
Okay. Perfect.
Yeah.
It's been wonderful chatting with you, Erica.
Oh,
I have learned so much from having this conversation, and I'm sure that everyone watching this and joining us have learned a lot about what we should be looking at now and what we should be thinking about regarding mortgages. Taking a mortgage probably, for most people that I know ever, and you could say so too, is probably the biggest investment of their lives. So it is pretty. Yeah, it is pretty. It is pretty important. Just one final question. Again, looking at the overview of things, and in the last 3 weeks, and then what could possibly be going on is. Are there other changes that we probably haven't touched on that happened in the last 3 weeks? What should we be thinking about those? What should we be looking at with regards to those?
The thing that pops out in my mind right now is we were, prior to all this happening, about 3 weeks ago, or maybe a month ago now, that just flew by. A month ago was that we were talking about some big changes that were going to come into helping, like, basically first-time home buyers,
right?
Or even just somebody who has owned a home before, but now are getting back into the market. And it was the fact that they were going to lower the posted rates and how we qualify for mortgages under the insured mortgages. So that was going to be this big change that was supposed to happen April 6th. That has been put on hold, of course, because of what's happened. So essentially it was like, if if you were buying right now, insured,
Mm-hmm.
the qualifying mortgage rate was 5.9. It was 5.34,
Mm-hmm.
and then it went down to 5.19, and it has actually come down to 5.04, and I'll discuss that in a minute.
Okay.
But it was supposed to completely change from that too. So it was gonna, in a nutshell, help people afford more of a purchase price and a little bit more of a mortgage, okay, based on your income.
Mm-hmm.
So that's on hold, but the posted rate, the qualifying mortgage rate that we're using, and most
Mm-hmm.
banks have already followed suit and others will too, has come down to 5.04.
Okay.
That's what we qualify you at. But you're going to pay a mortgage, let's say if you go fixed today, 2.79, maybe 2.69. And again, we do believe those rates are going to come down. So don't quote any of these rates I'm giving you. It's just
Yeah.
a ballpark,
Yeah.
honestly, because we do think even after tonight, the rates will come down
Okay.
again. So the difference of the 5.04 isn't much, but it's
Okay.
something. Like if you were to
Yeah.
tell Louise Hendricks, who is one of the realtors I use,
Yeah.
it would be a nice negotiation tool. Let's say if
Right.
you were previously approved at $500,000
Mm-hmm.
and now you're approved at $510,000.
Right.
That's the difference. It's very minimal, but
Mm-hmm.
it's something, and
Yeah.
maybe it could help in a negotiation when you're purchasing your place. So
Right.
there's
Yeah, and you never know. I mean, I've seen places that are like 510 and some places that are like 515, and the difference might just be having more options than
that's right.
what you were qualified for before, and the difference might even sometimes be just $1,000 or $2,000, and you never know
Yeah.
what that means to
Yeah.
each person.
Yeah.
All
So
right.
what I want to leave off with though is
Yeah.
just the understanding that, again, this whole thing that's happened to all of us is happening to all of us,
That's right.
and to just discuss it individually with your banks if you have questions or you need help.
Mm-hmm.
Again, they're there to help you. They do not want to see anybody go into foreclosure.
Mm-hmm.
And this could be longer than we thought previously, right? So it might go on 3 months, 6 months, but there is no real given timeline at this
That's
point.
right.
And there was something I wanted to say that was very important, but essentially, yeah, to ask those questions so that you get the help that you need.
Yeah.
And right now, if people have questions, they can more than happily, I'll answer anybody's questions right now.
Right.
But it will be more for information purposes. And then your best bet is to just talk directly to your bank.
Okay.
And if you're a new person to the market and all that kind of stuff, then I'd love to talk to you
Mm-hmm.
and get you prepared. So that's the thing
Got it.
that I would love to do, is just to continue talking to people and getting them prepared so that when this is all over, then they're ready
Yes.
to buy. Because
Yeah.
we can do that. The hypothetical pre-approval, let's say.
Okay.
Never use that word, but that's a new one for me. Hypothetical pre-approval. So
we're going to get so many new words in the dictionary for 2020.
right?
Social distancing is going to be one of them.
Yep. Social and then physical
that,
distancing.
yeah, and that's going to be the second one.
But yeah, it's important to know that not to give up, because there will be a future after this.
Yes.
And so if you're prepared, and maybe now's the time too to do that, so that I can help you with knowing how to fix your credit if it's not good right now, or if you just don't know what credit is. That's a great referral for me, honestly.
Yeah.
I love those ones because for whatever reason, I love credit and I love fixing it and I love starting it. So those are great ones, and you need it for when you get your mortgage. Yeah, and maybe even setting up ideas of how to save for a down payment for the future. So there's all these things that people can be preparing right now, so that when they do get their jobs back and whatnot, then they hit the ground running and they're the first ones in the paycheck.
That's right.
There is that silver lining to think about. And again, you're not paying for the service.
That's right.
It's just available.
Okay, and I'm also putting up on the screen right now Erica's contact details. You can send Erica an email or give her a phone call. She's more than happy, like she said, to chat with you, answer your questions, and see how she can help you. Erica, again, thank you so much for joining me today. It's been a wonderful conversation. This is going to be available for replay on YouTube and Facebook. So if you didn't quite catch us online, feel free to share with your friends who really need to hear this, because everyone all over Canada, not even just BC where we are right now, everyone all over Canada needs to hear this. So feel free to share with them. I'm sure they will thank you very much for it. The Talk to the Expert web series is going to continue next week. And we've got lineup of fun things to chat about here, from loving your home, since we're all staying in our home right now, right? We need to find ways to love our home better. That's on the 6th of April at 10 a.m. I'll be talking to Shonat Fraser on that. And of course, there's a lot of anxiety in the air right now. Everyone's anxious, and Erin Johnson is going to be helping us know how to manage our emotions and how to stay clear, how to stay positive during this time. If you are a business owner, you want to really come on Talk to the Experts on the week of 10th of April, because we're going to be diving deep into all sorts of business talk, from getting brand clarity and talking all things marketing, digital marketing, marketing automation, social media marketing, increasing your visibility through video, photography, and brand design, and all that fun stuff. And then we're going to be having a lawyer as well talk about employment benefits, all the benefits that the Canadian government is putting out there now. I know you've got questions also, even as employers, in terms of contracts. What should we be doing? Staff being laid off. If I get laid off, what should I be doing? What should I be saying? And all that fun stuff. So definitely join us in all these conversations. Erica, thank you so much for joining me today. Thank you. I really can't thank you enough.
Oh, I appreciate the opportunity. Thank you. This is awesome that you've done this.
Good. Thank you, Erica. Thank you so much. And I will see you around.
Yes. See you soon. Thank you.
All right. You take care now. Bye-bye.